Hey, Dividend investors, bonjour, Mike Yehu here, founder of Dividend Stocks Rocks. Welcome to this YouTube channel where I help you to invest with conviction so you can enjoy your retirement. Today, we are going to do part 2 of our interview with Tracy Ma. So in part 1, if you've missed it, just click on the link below. We introduced you to Tracy. She had reached fire in her 30s. So it was all about finding your place in life and how to start investing in real estate. Today, we are going into another level. So she's going to share some strategies to get started to find your cash down. Also, 3 characteristics for properties before you make an offer. She's also going to talk about the current market with interest rate rising. Is it the right time to go into real estate? So it will be a jam-packed video full of great information. Once again, Tracy Ma from Financial Nirvana Mama. Go check it out in the link description below. And now let's take a look at the rest of the interview right away. I want to get into real estate in the coming years. Now I'm at the opposite side of you. So I've grown my business, I have my portfolio, and now I'm thinking about diversification. So I have a few questions about how to get started, and I think it will be very interesting for our listeners as well. So the first one is obviously the cash down. What are the best ways to get our cash downs to get started, and at how much do you is it how much in terms of percentage, or do you look in terms of like the cash flow you're getting? So you're putting enough cash down so the mortgage pays itself by the tenants. How do you determine how much cash flow you want? And first, how do you get that cash flow? That not cash flow, but cash down.
For sure. So I'll answer your cash down first. I was going to say that this may not really apply to you, but I would say I'll give you three solid strategies of saving some cash to buy your first or next rental property. Just as bottom line, typically, if you don't use these 3 strategies that I'm about to tell you, you have to put a minimum of a 20% down payment. So the other
Okay.
3 strategies I would share is like a great way to find a way not to pay the 20% down payment. So the first way is if you're a first-time home buyer, you can start with your interest-free loan through your RSPs. So use your RSPs as a down payment. That's actually how I started and bought my first condo. Another solid way is if you don't mind moving, then you can convert your own home into rental and then rinse and repeat. So for example, you buy a condo, you live in it for 5 years, and then you say, oh, I could convert this into rental. Then you can extend your mortgage terms, move out, and go buy another place, and then live in it for another 5 years, and then rinse and repeat. And when you do that, you don't have to pay the 20% down payment. You can get a 5% down payment. It's considered your principal place of residence as long as you live in it. You must live in it. So this is something I've personally done 4 times. So this is this is how I've scaled as well. And you could do this with a multiplex, right? So the other one is you can house hack, where you have a home in your house where maybe the basement is a great way to convert to another unit. And then you use that as an income source to pay for your next rental property. And that's actually something I've also done, where I've house hacked and had a unit in my house, and that was used as a savings to pay for my next rental. So those options are all available, but I would say then obviously they have their pros and cons. Otherwise, if you don't like any of those options, then you'd either fork over the 20% down payment, or find someone to help you pay the 20% down payment, which is through the joint venture approach.
Yeah. And preferably a silence partner, right?
Yeah, a silent money partner, or you become the silent money partner. That would be amazing. Yeah. Yeah. I prefer to be the silent money partner now. Yeah. So getting back to your question about cash flow. So definitely the golden ticket is you must cash flow. Like, it must make money. So that not meaning I don't mean like just appreciation. I mean, like, after you pay your property taxes, your mortgage payments, your wear and tear, and even budget for property manager, is it positive? Can you make it positive? And so the easiest ways to do that is if you bought a fixer upper, it would have maybe only attracted a certain rent if you kept it that way. It was like a really ugly, semi townhome. But then once you did some cosmetics, you can really boost the rental income. So that's a way to say, okay, well then how much positive cash flow can you get? So my bare minimum was $100
Okay.
per month per door. And over time, the great part of it is during inflation period, when the inflation's this high, well, your rent also can go up as much. I found that over the years and last, well, I don't know, especially the last 3 years when inflation's gone up so much, my rent that I can actually command is much higher than even the inflation rate right now. So it just shows that it does well when there's high inflation with rent. And then surprisingly, the mortgage payments have gone down over that time because the interest rates have dropped, right?
It's a great combination.
Yeah.
So you mentioned earlier that you're making money when you're buying. What are your top three criteria when you look at a property to determine if it's actually a good deal for you or not?
So I would say the first thing is you really want to become a neighborhood expert. So what I mean by that is you know an area so well that you know how much rent that place can command, right? You just know it. Like it's like you could just look at MLS, you would know how much the house would typically sell for, you know how much rent that would collect for. And you can go to Rentometer. Rentometer is a great resource to check like what specific area, what kind of rent it would collect in that specific area for 2 bedroom or 3 bedroom.
Mhm.
So once you get acquainted with the numbers, then you start becoming neighborhood expert, meaning you know the demographics, you know what type of tenants it could attract. So for me, is like number one, become a neighborhood expert. Because then after that, then it's much simpler. Then you just focus on that area. You find the property that you think that you can add a ton of value, really force the rent, and then it becomes positive cash flow. So those are the top things. So in terms of like, if I had to distill it to top three criteria, it'd be like the city, of course, I assume that, you want to be in a city that's growing, growing, growing,
Mhm.
and a neighborhood that's growing, growing, growing. So both of those have to be growing. Then is there potential to add value? So how do you make the dough? Okay. It's like buy a property that grows, 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 and makes a lot of dough. So how do you make a lot of dough? You got to make sure that you can add value so the cash flows and it's worth a lot more than what you bought it for. Maybe it's 10% more, maybe it's 15% more, but like it's it's not, I would say that's probably one of the hardest things to find, and you get better when you start looking at a lot of properties. And then the third is what type of tenants are you going to attract? Because just a property cash flows and it's a great neighborhood. You have to think, ooh, this whole street is full of multi-unit rentals. Then maybe the type of tenants that you really want to attract are not going to be in that clientele because that one street is full of apartments. So you really need to think what type of tenants you really want to attract. So those are my criterias.
Yeah, so headaches and make sure you have like some quality. So it looks like a lot of the buying process on the stock market actually, and sometimes you have to
It's
pay.
very similar.
Yeah, and then you have to pay for quality. So yeah, that totally makes sense. Speaking of market, the stock market is overvalued as usual, and now if you're looking at the housing market in Canada, a lot of people will tell you, but Tracy, yeah, it's great. You did that like 10 years ago. You've built up your empire of monopoly empire, but today property seems so overvalued. Is it like, should I start now or should I wait for a housing crash? Mind you, we've been waiting for that for like what, 10 years now, but do you feel like comfortable investing today in that market?
I would say for myself, because I literally am so anal with the neighborhoods, I've I actually did purchase just before the COVID crash, and then that took me it took me a year to find. But now, because there isn't actually anything in the areas I'm looking for, I'm not interested. But that doesn't mean there's no gems. I think that if you had a certain area that you're looking for, there are gems. You just need to go find them. And it takes way more work in an environment where there isn't a lot of supply, right? So right now in Ottawa, there's not a lot of supply at all. But I'm sure if you're looking a little bit further outside of
Hmm.
Ottawa, there are places. It's just that, are you willing to go drive out an hour to that city, right? So that's the type of thing. I always feel like there is deals. It's just how much effort you want to put in.
Oh, that's
So
interesting.
yeah.
And what do you make out of interest rate that are about to rise? Is it a source of concern or?
No, no, not a concern. I mean, I just thinking back when I was like 2008, I think I was on a 5-year fixed mortgage and it was 5.69%, right?
Oh,
And so I'm just thinking like it was cash flowing then. So to me, it's like the interest rates are so crazy low that there's a lot of time that it can go up and still cash flow. So then I actually kind of look forward to for the interest rates to actually increase a bit, because then it would actually bring a balance to the housing market. So
hmm.
getting back to your question, waiting for a housing crash, I've not seen one in like it may when I talk about housing market crash, I mean the housing market could do nothing for the next 3 years. So the property values might have not changed or might have gone down 2%, but it's like literally nothing.
Yeah.
So it would just happen in Ottawa where the property values didn't change for 3-4 years. So I would say that would be a correction, but I've never seen a housing market crash. Even in the middle of the financial crisis, Vancouver might have had a few properties that looked interesting, but it lasted for like 2 weeks. and then everything just skyrocketed back up. So I just think like, the best time to do it is now still. Like there are places like in Ottawa, you can go to Gatineau and
Yeah.
there'd be cash flowing properties if you really want to venture into Gatineau. So it's just how much effort you want to put in.
So it's really a matter of knowing your neighborhood, making sure that you find the right property with the right tenants. And then if the market goes sideways, well, you just leave your tenants paying your mortgage in the meantime, and then you just be patient about it. So it looks a lot like dividend investing actually from
It
that
is.
perspective. It's crazy.
It's exactly like dividend investing for sure. That's why
and
this.
and when you invest in the stock market, you have to be like to have a high risk tolerance and not mind like short-term market fluctuation, because you have that portfolio value in your face all the time, which doesn't happen in real estate. But what do you think makes a good real estate investor? What are the qualities required?
I would say that to be very resilient, like you really need to know your why, because it's it's actually quite stressful in so many ways. If you think about it, you have tenants and things need replacing. And even if you have a property manager, if you're not used to that lifestyle where you have this other job, I would call it a job, other than your 9 to 5, it could seem like a pain in the butt, right? Especially if you're not used to it. So I say that, why is it that you want to get into real estate investing? So I always stress on doing this exercise where you ask yourself why 5 times. So a lot of people are just like, well, I want to create more passive income. Well, why do you want to create more passive income? Because I want to go um, take a vacation, extra vacation. Why do you want to take extra vacation? Because I want to buy my own time. Want to have more time? Why do you want more time? Because I want to, achieve X, Y, and Z. So when you get down to it, you're like, whoa, this is the reason why I want to get into real estate investing. And that, if you draw your vision of what you think your life could look like and just keep thinking about that, like seeing that, and then going out and buying the assets like rental properties, when times go hard, you are still able to get through it. I would say really stress on education, because I think that a lot of people don't talk about like the problems they face with their tenants, which is actually not that bad, but it's just annoying sometimes. Then you realize these are all the different types of scenarios I could face. I might have a tenant that actually might bug me to go change a light bulb. Like, those are things that are like, okay, I just realized that yes, it might be bothersome, but in reality, if you know how to track the right tenants, it shouldn't take a long time. It's about 2 hours a month. in the grand scheme of things, and you add that up over the years, it's like, yeah, it was seeming a pain in the butt at that time, but over the years, you're like, actually, this is pretty passive, really, really quite passive. A little active management. So really stressing on your why and just being res resilient,
Yeah,
resilient.
and those annoyance seems to
Mm.
not be that important if you have the overall perspective, knowing your why, which is not necessarily to own that place that you're renting, but to reach like this freedom or more time, or like spend times with your kids and your spouse. And then you're just like, okay, so this guy is asking me to change the bulb. Okay, big deal. We're going to do it. And then we're going to move on. So, oh, that's great.
Yeah,
I have a question that has nothing to do with real estate before I let you go. I know you are a dividend growth investor like me, so I'm a little bit curious about what's inside your portfolio. So if you don't mind sharing like your 2 or 3 favorite stocks right now in your portfolio.
for sure. I would say, I don't know if they're like my favorite. Okay. It's funny that you asked. Okay. I would just say that I have 2 Canadian stocks that are my top two. They're Fortis and TD Bank, which I think they're actually tied. They're tied in the top place. And my other two is actually Tesla and Apple, which are my
Whoa.
growth stocks.
Okay.
Yeah. So not like I purposely made them the top, 3 positions. It's just that over time, they've grown into that position, being my Apple and my Tesla have grown into being the top two versus TD Bank also grown because I only purchased it maybe 2 years ago, maybe 3 years ago. And, since it's done really well during
Yeah.
the crash. Well, Fortis has been something I've been adding on. So maybe that's more purposeful. So, but most of them have compounded the way up there. So I'm happy where they are.
Definitely. That's for sure. Oh, that's great. So, Tracy, thank you so much for being here with us today. And for those who are more interested in investing in real estate and building their monopoly empire, where they can reach you out, where they can follow you.
For sure. I was going to say, well, you can watch my videos on my Financial Nirvana Mama YouTube channel. And please head over to my website, financialnirvanamama.com, where I have a free real estate investing toolkit to actually really get you started in buying your first or next rental property portfolio, including a step-by-step checklist. This is the things that I wish when I was starting out my investing journey, working as an engineer, with kids, that these things were available. So this is why I created these resources, and I show up on YouTube to show that it is possible.
That's amazing. So Financial Nirvana Mama, both on YouTube and on the web. I'm going to actually use that checklist. So to get started, I think it's a great idea, great tool to help investors to build their wealth, diversify their portfolio. And once again, thank you so much for sharing your knowledge with us today.
Thank you, Mike.
All right, so that's it for today. I hope that you have enjoyed this interview with Tracy Ma. 2 things that I get from this second part that is mostly important for me. The first one is becoming the neighborhood's expert. So it's not about just only the property or the location, but also about knowing where you buy and which kind of tenants you're going to attract. This is all about your strategy in buying, and as it is similar to stock market, you make money when you buy the stock, not when you sell it. The second thing, know your why. Real estate investing is such a big journey, similar to invest in dividend paying stocks. When you select your own stocks, you do your own due diligence, your research. If you are not super passionate about it, if you do not want to spend hours into it, and you can't remember why you're doing that all the time, so you don't have a clear goal, chances are you're going to find that annoying. You are going to find that as a burden more than anything else, and you're going to take all the fun out of investing. So investing in stocks, investing in real estate, it's very, very similar in many points, but the most important part is you must want to do this. You must know why you do it. So again, I hope that you have enjoyed this video. Give me a thumbs up. send me some of those questions. If you want me to ask Tracy a few more questions about real estate, that could be fun. So put that in the comments. Don't forget to watch out her videos on the YouTube channel, Financial Nirvana Mama, and on her website as well, where you can download that checklist for real estate investor. And until the next video, stay invested.